Hi, this is PR Sundar. Welcome to Post Market Reports sponsored by Delta.exchange. Nifty closed positive for the second straight day, but it came with a lot of volatility. So in the morning, the volatility index was higher, then it came down. Again, around like 1:30, the market started falling. The Nifty fell about 150 points just before the Europe market opened. And again, the week shot up. Then towards the end of the day, there was some recovery. So obviously we know, if the markets are down, towards the end of the day, the domestic institutions will do some kind of a buying. So exactly it was something like yesterday. Yesterday the selling started after 1:30, went up, came down, went up. But today the selling came even before 1:30 and that was bought into during the last half an hour. But on a close to close basis, it's not significantly higher. Why I'm telling this? Yesterday, during the last half an hour, the market shot up like anything. And the Bank Nifty, yesterday's closing is actually 200 points below the actual closing. And Nifty, yesterday's closing is about 30-35 points below the actual closing because of the weighted average. So by taking the actual closing yesterday, today the markets did not make any big move. But markets were very, very volatile. IT stocks like TCS has fallen more than 50 rupees. Towards the end of the day, recovered the entire 50 rupees. So IT stocks recovered. And Reliance was firmly trading in positive since morning, but a pathetic Axis Bank. Axis Bank has already fallen nearly 30%. And tomorrow is the result. So ahead of the results, it's falling another 3%. So the Bank Nifty was too volatile, shuttling between green and red. But finally closing, I would say it's a respectable closing because for second straight day, the markets are in green. And also, the last Friday and this Monday, these 2 days, the sell-off was a very, very brutal sell-off. And small cap index has fallen, I think about 7-8%. And mid cap also fell about 6-7%. So there is a report that says that, so these things are happening mainly because of margin trade funding. What they call it as, brokers call it as MTF. So that means, like, let us say if you have got 1 lakh rupees, you can buy the shares up to 4 lakh rupees. The remaining 3 lakh, your brokers will fund you and they will be charging some interest. The standard rate of interest is about 9-10%. Since the mid-cap craziness was there, the crazy bull market in mid-caps, so the people bought, they bought some shares, the shares moved higher. Then they thought, this market will continue to move higher only. Then they borrowed the money from the brokers through this MTF facility. Then they started buying more and more. So finally, somebody is having 1 lakh rupees is holding shares worth 3 lakh rupees or 4 lakh rupees. Now the problem is that those stocks are falling. Look at Kalyan Jewellers. Today it went to lower circuit. It has already fallen 20% in last 1 week. Today it has fallen another 10%. So 30% fall. So many mid cap and small cap stocks started falling 30%, 40%. So like if you have bought for 1 lakh rupees, if it falls 30%, you lose only 30 rupees, 30,000 rupees, 30%. But with your 1 lakh rupees, if you have bought the shares for 4 lakh rupees, right, the 30% fall will be for 4 lakh rupees. That means 1.2 lakh will be wiped out. Your entire capital is gone. On top of this, you have to pay the interest to the broker also. So I think this like leverage through the MTF by the what we can call it as a new generation post-COVID traders and investors. I think they have burned the fingers now. So the way the markets are, reacting for the last 2 trading sessions, so it looks like those big damage is done already. So that damage is not likely to continue. So US markets, today consumer price inflation data is there. So, markets will be very, very jittery. So if consumer price inflation data comes positive for the market, if the market recover there, so here also we can expect some more recovery and then, continued market recovery. If you look at technically, I already came out with a video, but for the short term, let me tell you, on November 21, we made a swing low, and then after that, we recovered about 1,800 points, now falling. And that November 21, intraday low was 23,263. So now we went below that, but we tried to take out that level many times. But that was the intraday low. But closing low on November 21 was 23,350. So that level has not been taken. Once that 23,350 was broken on the downside, after that it continuously trading below that level, never trying to take out that level. So once that level is taken out, then only you can turn bullish for the short term. And of course, there are lots of ifs and buts. Today, US consumer inflation data. Then tomorrow, what happened to TCS after the results shot up 5-6%? What happened now if our HCL technology fell 8-9%? Now, what is going to happen to Infosys tomorrow, Axis Bank tomorrow, Reliance tomorrow? So if all three results are good, assuming, the markets can rally. But if all three are bad, that low can be broken. 23,000 can also be tested. But the best possible scenario will be 1 or 2 good, 1 or 2 bad, or something like that. Right? So anyway, so once these 3 corporate results are over, then the people will start focusing on other corporate results during the next 1 or 2 weeks. Today, IT and the pharma dragged the market, and auto also. So Maruti is there are some good news for Maruti. I think Maruti has, for a long time, it has been trading between 10,000 and 12,000. Other than that, today other auto stocks came down. So stock-wise actions will pick up for the next 2 weeks. Then again, the budget will be the day to make or break. So markets have fallen. Right, market met with an accident. We are in hospital taking the rest. Right, so whether we are going to, after this rest, we are going to recover and then run again, or we are going to die in the hospital. So we will know only on February 1. So let us see. Meanwhile, the FIIs once again have sold 4,500 crore. Probably this weekend I'll come out with a video about this FII selling. And they just close their eyes and they sell. Of course, that was expected. Otherwise, what is the reason Nifty fell 150 point intraday before 130? So today morning also I told you, any intraday recovery should be sold into. It's a sell on rise market, not buy on dip market. So that's why when the market went to 23,300, so FIIs decided to sell. Domestic institutions have bought for 3,700 crore, but there is no use, right? So anyway, so be ready for some kind of a roller coaster ride from tomorrow onwards, and all key events and those kind of things. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.